first, looking at the health of the Swiss economy, it looks on the surface to be glowing, but there are risks, trade wars, and at home speaking, it really is the mortgage payers, those that are heavily indebted in the real estate market. So we'll get to those points in just a moment. But what's really at stake for the Swiss businesses?
Well, you've said it. I think, first of all, we have to put everything back into a context where fundamentals remain relatively robust. Switzerland is growing above 2%. And, basically the activity is widespread from the financial industry to the consumption to production. And obviously trade is doing okay. So the fact that Switzerland has fundamentals that are now robust is also thanks to the fact that our big trading partners, and I'm thinking Europe, I'm thinking Asia and China, are as well showing better
Lots of
or
uncertainty, though,
activity
when it comes to trade. While it looks healthy, and you mentioned the EU relationship there, sometimes on rocky ground, we know. And speaking of a dispute, retaliation, when it comes to trade, lots of countries speaking of retaliating. Although the Swiss economy is healthy, some are saying that the international economy could have a drag on domestic economic health here in Switzerland next year. Are you expecting an economic downturn in 2019, Samy?
No, there's no reason, and basically there is nothing, absolutely nothing that indicates that we're about to enter a severe slowdown. Whatever you look at, a broad base of economic indicators, the signal you get from interest rate, the signal you get from copper prices or commodity prices in general. Obviously there is all these trade issues, but for now we're not yet into it. I would say it's still a concern if it materializes, but if it doesn't, I think nothing indicates that we're heading into a very important slowdown.
But Samy, you have
soon.
active dialogue with some of the companies that you speak to, no doubt. And are any of the bigger corporations saying they're seeing a slowdown in, say, orders or large investment?
No, I would say globally they remain pretty confident. I think if you look at profit growth, it's running at a double-digit pace. So I think they're pretty happy about that. There is a lot of noise about politics, geopolitics, and trade, and hopefully that won't materialize. And I think there's a debate around if it's a political posture or something more important. But if you just stick it to fundamentals, basically what you have is demand, i.e. companies manage to sell goods and services, and there's still a very cheap cost of capital. And if you bring the two together, demand and cost of capital, well, basically that leads to corporate profit. And,
strong demand is always good,
massive,
Samy. Just talk about the real estate market here in Switzerland, because what happens when those interest rates increase? What happens to that individual homeowner that's heavily indebted? What happens to them?
Well, it puts a lot of pressure, that's sure. If you look at housing cycles, and what basically kills a housing cycle is always when interest rates reach too much of a pressure point. But we're not there yet, right? The rates are still in negative territory, and usually it's not the first hike that eventually kills a housing cycle, but rather the last hike of a hiking cycle, and we're very far from that. So yes, there is leverage. Yes, people have bought houses, but I think it will take much more constraining cost of capital to really bite into this.
So your message
activity.
to the individual homeowner is not to panic, not to worry about their debt?
Well, I would say if you look at what's going to happen in the next 18 months, it's probably going to take that time lapse to exit negative rates in Switzerland, and eventually for long-term rates to breach 50 basis points or 1%. So we do feel that for the next 18 to 24 months, interest rates are going to remain very, very, very low and sufficiently low not to bite into
Fortunately for many
into
homeowners, though, and workers out there, could we see wage increases? We know that unemployment is ultra low and some talents are hard to get hold of. Does that mean we're going to see an increase in those salaries?
I would say in a normal economy, you could expect a bit of a wage growth. The problem in Switzerland is that prices as well as wages are already at very elevated levels. So I think the only thing you can hope for is a couple of decimals of increase on a macro level, but I don't think we can count on significant wage growth at this stage because the level is already very high. And of course, we don't know
yet if the Swiss National Bank will surprise us tomorrow. It could happen. It's not the first time, even with things like text changes in the communications. But I have a question for you, Samy. You're our last guest to be asked on this topic. When do you think the Swiss National Bank will increase those interest rates?
Well, I'm not going to be a big outlier, unfortunately. I think it's going to be September 2019. And, following the very strong guidance that we had from the ECB, that whether we like it or not, the Swiss National Bank is part of the Euro bloc. The destiny of the Swiss franc is very important for the SNB's inflation forecast. So very clearly, not before and probably not after September 2019.
So you're going with consensus there, Samy. You're not being contrarian.
Consensus is not always wrong. It's right 80% of the time. So hopefully we'll be spot on this one.
That's fair enough. And the SNB, just a final quick question. It still thinks that the Swiss franc is pretty high, right?
It is fair value, whether you look at, the SNB's model or general models, around 119, 120 would be something probably more normal. We're at 115, so we're not completely off the charts either, but very clearly, it does mean that it's difficult for the Swiss National Bank to act much before the ECB, because then it would risk an appreciating currency. And obviously, they don't want to import deflation, so probably they will be patient on that as well.
Very good, Samy. Thank you so much for joining us and giving us your pearls of wisdom there.
Thanks, Amanda.